Good afternoon, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hopefully all of you had a very nice weekend and a very good day of trading as well. And in today's markets, guys, well, the bounce continues on to now day number 2. Now, of course, 2 days worth of bounce is not to say that the bulls are out of the woods just yet, and the daily downtrends by the bears are still quite significant. However, it's nice to see that we had some broad market participation. The SPY, the QQQ, everything pretty much to the upside, and that is without the participation of big tech. Big tech largely still staying muted or slightly down over the course of the day today. So in today's video, guys, we're going to take a look at a few things together. Number one, just do a quick recap of the expectations for the week. I gave the expectations on last Friday's video and also in the last night's top 5 options video, but we're going to do a quick little review as to what could possibly be some of my predictions or best case guesstimates for the upcoming week to come, considering the fact that we have a big Federal Reserve meeting on the Wednesday session where we get a summary of economic projections. Once every quarter, the Fed updates us on their guide as to the direction of interest rates, the GDP rates, and the unemployment, or rather jobs data that they expect to see for the forthcoming year or two. So it should be a very interesting section. So we'll be going over some of the expectations for the week. Thereafter, we'll dive into our major technical analysis rundown of our major market indexes, followed by our analysis of big tech, because big tech didn't have too good of a day today. And then lastly, wrap it up with some of the plays that I made in my portfolio today, some of the opening trades, some of the closing trades, and what I have remaining for the rest of the week. So should be a very fun packed video, guys. Let's jump right into it. The SPY up a nice 0.77%. The Qs up 0.65%. And you can see if we take a look at the heat map here, it was a very nice day of broad market rally. A lot of the stocks coming back off of the damage that was done just last week. Now, when we put it on a 1 week relative performance, you can see the market is a little bit more mixed. But don't look at the 1 month, because then you would see that the damage is still largely in play. But nice to see after 2 days worth of bounce, we have a little bit of energy back into the markets overall. Like I was saying, 2 days worth of bounce is not enough to say that the bulls are back in control and going back towards the all-time highs. Not even close. We're probably just expecting a lower high. Some people call it a dead cat bounce, but we'll see how far the bounce actually carries us. And will that give the bulls a good opportunity to reset some daily uptrends, or will we just get upset by more downside if we get some more uncertainty out of the Trump administration, their comments, the tariffs, and everything in between? Moving on to the group screener, you can see that on the 1 day relative, everything really performing nicely to the upside. It puts us on a 1 week relative where most of the major sectors are now in positive territory, but still trailing behind. We have real estate, healthcare, and consumer defensives staying a little bit weak. On the 1 month, still nothing back to the good performance that we saw over the month of January when the markets were clipping into all-time highs, but you have seen some reversals of the damage. The two worst sectors still at this point in time, consumer cyclicals, technology, and communication services. Communication services, guys, is largely just Google and Meta. Sure, there's a couple telecom stocks in that bit as well. Netflix and Disney are in there too, but these two have such a big weight that when they pull down in such a significant fashion, very tough for that industry overall to actually show positive gains, right? So before we get into more technical analysis, let us dive into a quick little recap as to what the expectation moving forward for the week is going to be. Well, number one, in terms of the technicals, we know we're coming off of daily oversold conditions on the SPY and daily oversold conditions on the Qs. So we knew that eventually the bounce was going to come. We couple that with the fact that we were also in a zone of confluence right around the 50 EMA on the weekly for the Qs, prior resistance, which is now also support. You see that best on the monthly time frame for the Qs. It's where all the monthly candles closed back in July through August. That's why it's a big level of support. Also, the 12 monthly EMA. On the SPY, you can see pretty much the same thing. Tap of the 12 monthly EMA. You also have the Qs coming into 50 EMAs, daily oversold territories, and then as well, prior resistance, which should be newfound support. So we had technical confluence as well. What other confluence did we had? Well, we also knew the fear and greed index was absolutely bottom, guys. Market sentiment was really in the dumpster in the past few weeks. Extreme fear all the way down to 14.15 at the midpoint of last week. So we knew that eventually, right, we're going to have a little bit of a pop. Market momentum was extreme fear. Net new 52-week highs and lows on the New York Stock Exchange was, for all intents and purposes, at the lowest points that we've seen over the past year of trading. And stock price breadth was also in extreme fear territory. I was telling you guys that normally when you have technical indicators that are showing oversold into support, and when you look at percentage of stocks above their 20-day moving average, it was at a low rate of 20, 19, 18%. Usually, you look at the last 10 plus years of data, it's a decent area to be looking for a market bounce and some buying opportunities. Percentage of stocks above their 50-day moving average, that is still roughly very low at 30 right now. It's come up. Last week, it was like 25. And I was also saying, historically, when you look back at the 10, 15 years of last data, usually a good point where the markets will find some form of support and get a little bounce underway. And percentage of stocks above their 200-day moving average, the longer dated moving average, we were at a low point not seen since October of 2023. Also, can we go lower? Yes, but usually the markets don't just drop in a straight line. You can see some bounce action by the bulls. That's exactly what we got. Now, keep in mind, we also have a very big catalyst this upcoming Wednesday, which is going to be the Fed interest rate decision. I'll remind you the expectations for the end of the year for this meeting. If you look at this meeting, 99% chance we're not getting a rate cut. But the markets have been oscillating here as to how many rate cuts we're going to get by the end of the year, currently sitting between 2 and 3 interest rate cuts, which is roughly in line with the Fed's current summary of economic projections. We're going to get a new one on the Wednesday session. But the reason I bring this up, guys, is because we have to talk about the Fed put. I'll remind you, where do we stand right now in terms of interest rates, and can we find clues in terms of historical past? I brought this up last on the Friday video and also in the Sunday top 5, but just a quick reminder, just take a lesson down in history. Now, history doesn't repeat itself, but sometimes you can find certain parallels. If you go back to 2018, which was tariff episode number 1, started off the year well, and then came the onslaught of the China tariffs. Funny enough, the dates are roughly the same. January through March, we had a lot of volatility in the markets. Top to bottom on the SPY at that point, to the worst point, was around 11%. Kind of what we got now. Thereafter, the markets recovered from the tariff volatility, and then we got the Trump and Jerome Powell love story, where the Fed was working against President Trump. President Trump was on Twitter at that time calling for Jerome Powell's resignation because the Fed kept increasing interest rates. Inflation was at about 1.8%. GDP was standing around 2, but the economy was starting to get a little hot after roughly 5 years of keeping rates at 0. So then the Fed embarked on a rate hiking cycle, very slow initially in 2017, but then really started kicking it up a gear in late 2018. And the markets did not like that because Jerome Powell was very firm on his stance at the time of wanting to kind of prevent the economy from running a little bit hot. Now, that was also taken off in the early stages of 2019, which caused the markets to rally, as now we didn't have a Fed that was dead set on increasing interest rates too fast for the market's liking. And then it brought us a bit later, about a year later, into the COVID pandemic, which everybody, I'm sure, remembers. The reason I'm bringing it up, guys, is because, look, we had the COVID pandemic in early 2020, right? Right? People might think now that now is peak uncertainty. Not even close, guys. COVID, you're talking about the entire world shutting down, a virus that was spreading. Nobody really knew how deadly it actually was. We did not have any vaccines for the next 6 to 7 months. Travel was shut down. Companies were sending people home. Unemployment rate, temporary and also long-term, was trending around 8, 9, 10%. It was a really bad time. Supply chains were absolutely broken. And there was no more toilet paper in grocery stores, guys. This was absolute peak uncertainty. The first stimulus checks only came 3 to 4 months after this drop happened in the markets, somewhere around here. The vaccines were not rolled out until that fall. So suffice to say, this was the craziest portion of uncertainty that many of you have seen in recent history in the markets. Where was the federal funds rate at that time? It was 1.5%. The only thing that helped the markets back then is, yes, the Fed cutting rates in 2 times down to straight 0, and then shortly after, they turned on the money printer, aka heavy amounts of quantitative easing, where they were buying back securities in the open market, both bonds and equities alike. But just initially, this Fed pivot from 1.5 to 0 caused us to have a temporary bottom in the stock market, and people were now a little bit more confident as to the market's ability to recover on a medium to long-term basis. Where do we stand right now? We stand at roughly 4.25 to 4.5 on the overnight rate, which gives you an average rate of 4.33, right? Now, if some of you expect the US economy to go into a recession because of the geopolitical landscape right now, consumers pulling back on their spending, consumer confidence down in the drain as well. Well, if you think people are going to stop spending money and companies are going to lay off employees, well, where's the inflation going to come, right? You cannot have both. You cannot have an economic possible recession and inflation from tariffs. They just do not go hand in hand. It's one or the other, right? So if your view is that we are going to go into an economic drawdown period, well, obviously, inflation will not be a concern for the markets, which means that the Fed has two mandates still. Number one, controlling inflation, which largely it's on its way out the door right now. But number two, maximum employment. Now, if we go into an economic downturn, even with tariffs, inflation will continue its way down, possibly accelerating to the downside. So then it opens the door for the Fed to do what they always do, which is the Fed put. The reason you call it the Fed put is because you know that when you buy a put, it's like insurance, meaning that the Fed is an insurance provider to the market in, as an analogy speaking, right? That being said, look at how much room they have to possibly cut rates. Now, they're on a very slow rate cutting cycle right now, but if a 1.5% cycle cut back here from this to zero was enough to backstop the markets, well, if they do it again in an accelerated manner and just take rates down 1%, 1.5% down to 3, rates would still be 3, but they'd still cut 1.5% off the top where we are right now because they would want to protect the jobs market. Then after inflation would not be a concern. Do you see where I'm going with this? The Fed has more than enough room and capacity right now to backstop any economic backdrop that we have possibly into the future. And if you think that what we're going through right now is worse than COVID, well, you might want to revise your definition of a worst point in time in the last 4 or 5 years, right? So that is the introduction. All of that is also leading into this current fact right here. So this is the longer aspect of the markets. The Fed probably has our back over the next 6, 9, 12 months. They have the tools to counterbalance this right now. And like I said, if you're thinking about stagflation, well, that doesn't really make any sense, right? Inflation can't really be maintained high if consumers completely pull back their spending because they're worried about losing their jobs and or lose their jobs overall, right? It just doesn't work. It's one narrative or the other. So if you're in the opinion that the economy is going to possibly crash, you're not going to have inflation and the Fed will be able to bring rates down aggressively to stem any losses in the jobs market. Where do we stand for this week, however? Well, take a look at the max pain here on the QQQs. Max pain is not how much can the markets go down to make everybody sell the bottoms and capitulate. Max pain in the options market measures where are the most amount of long call holders and long put holders going to expire worthless? Because we know that the people that take the other side of this trade most often are the market makers, right? Everybody buys long calls and long puts. Who sells it to them? More often than not, it is the market makers, not other individual parties. Now, keep in mind the max pain level for the Qs right now is standing at about 3 to 4% above the current price of the market. So meaning if the markets were to push up this week, 3 to 4%, it would cause a lot more pain to the options buyers than if the markets were to drop or rise above this level. So this is where most options would expire worthless. Curious, right? After everybody loaded up on puts, this is a monthly and quarterly options expiry. Could the market makers play a little bit of games and the algorithms as well play some games and push the markets higher, even though we're in a fairly bearish sentiment right now, just to make most people expire worthless? And then when they're done, do something like this, nice little weekly bounce, and then the subsequent rollover? It's very possible, right? Coming out of oversold conditions, support, weak market momentum, extreme fear, very possible. They throw everybody for a curveball this week by putting the markets up. Then, of course, you know what's going to happen. Everybody's going to FOMO back in, and then maybe they send it back down. Obviously, right now, I'm just speculating, but it would not be too crazy when you look at everything in combination. I like to look at confluence of different factors. And if you look literally at the SPY paints the same picture. Max pain level on the SPY is currently above the markets right now. Not that far above, but it is roughly a good 3% higher than the current market price. A lot of people loaded up on these put contracts, as you can see, way more than call holders. If they want to create max pain for everybody holding options, especially with the VIX coming down, they would close the market as close as possible to this 580 level on the SPY, which, funny enough, would just be looking into resistance right here for a possible market lower high. And then it's up to the bulls to then recapture the uptrend, or might we just see more pain leading into the April 2nd tariff onslaught, where Trump is going to put reciprocal tariffs on the rest of the world? Well, that could be some form of my best guesstimate, guys. It would not be too crazy. I'm not trying to project or predict beyond this week, but I would not be surprised if that could be a very likely scenario when we look at all things in combination. That is just my opinion, right? I'm not saying I'm God and I can predict the markets, but if I had to guesstimate one way that this could likely go, especially when everybody got peak bearish at the midpoint of last week, and only now they're causing the reversal after they have max people plowing into the put options like I showed you last Friday, it wouldn't be too crazy, right? So that is kind of my best prediction, quote unquote, for the week. But then again, guys, as I've been saying, right? If we're swing trading, we have to once again position at the lows, which I have done. And also, if we're trading with a long-term portfolio, the goal is just the DCA, guys. DCA with every paycheck. Don't pay attention to all the noise because your future self will especially thank you, right, for buying these dips and any and all further dips over the course of this year. If you have a 5 to 10 to 15 year time horizon, guys, you should be buying some of the highest quality companies in the world. Or if you're not an individual stock investor, at least be picking up some of the legacy ETFs, right? So that is kind of the introduction to today's video. It's the last time I'll talk about it. The rest of the week, we're just going to look at pure macro data, company earnings, and just pure form technical analysis. Speaking of technical analysis, let's dive into it, shall we? So into the SPY right now, we can see that we have a very healthy bounce, but a bounce is nothing, guys, because look at the size of the bounce right now. The daily bounce is good, but it's only a 38.2% bounce, and we are rejecting from the 200-day EMA. Now, good thing, guys, we actually cleared the highs of Monday, didn't close above it, but we did clear them temporarily. So the bulls are trying to go for some motion right here, and just keep an eye on your hourly trend, guys. Need to maintain this hourly trend and also need to maintain this 4-hour uptrend as well if you want to see the bounce continue for the rest of the week. Overhead resistance stays planted 575 up to 585, 10-point range, very big area of prior support. Resistance right now, the moving averages are there too. So any high is just going to be looking for a lower high. Then it's up to the bulls to prove it to us. Can they get the weekly uptrend back like they did back here? Or will we just roll over? We'll take a look at that one day at a time. We can't forecast out too much, guys, because there's so many catalysts on the horizon. Moving on to the Qs right now. Same thing on the bounce, but the bounce size is not the best for the Qs either, right? The bounce size right now is about a 38.2. Similar bounce, not quite making up to the 200-day EMA, but it did eclipse the highs of the Monday session as well, despite not closing above it. At least we've created some space off the lows. Pay special attention to your 4-hour trend change as well. First time we got a 4-hour uptrend since the entire move down, and the hourly uptrend as well is poised, looking for possible continuation. So we will keep an eye on the size of this bounce all throughout the week. Who is still in massive control, guys? Well, it's the bears, right? If you get a massive move to the downside, the retest of the lows or the rollover is highly likely, because at the end of the day, we're only looking for weekly lower highs right here. Then it's up to the bulls to prove it to us. If the bounce is too soft and you get rejected, revisit of the lows or lower is highly likely. This is a first decent area for some swing trades, as I was highlighting all of last week. Now the swing trades are in motion, so be diligent on your take profits into resistance. And if we're looking at DCA, this was the DCA area. Don't chase the market to the upside. If you want to be more patient, just wait to see who retains control. If you get another leg down into the 440, 430, you guys know what to do. That's when the second round of DCAs come in. Moving on to XLF financials. Nice bounce on financial as well. 1.17 out of daily oversold. I was saying into support, into daily oversold. Not a bad time for some swing trades or some long-term portfolio DCAs. And it was indeed a good option, right? Moving down in, the support zone stays at 48.25 down to 46.90. Decent little first bounce by the bulls, but still, who's in control here? Well, the bears, of course, right? The size of the bounce is okay right now. Once again, a 38.2 bounce. If everything gets rejected from here and we start revisiting lower, the odds of a retest of the lows or lower are very high, because this is not a very large bounce. For a nice bounce, you need to see at least $50 or maybe even 50.6 on the XLF. Give the bulls the most amount of space, the best chance possible to reset eventually into a daily uptrend. So the bounces are nice, guys, but they are only still bounces, right? Some people call them dead cat bounces. You don't know if it's actually a dead cat bounce unless you flush, right? It's only a dead cat bounce if it goes a shallow bounce and then revisits. If you get a fixed 50, 60, 70% bounce, that's a real bounce, right? The cat is still alive, and it gives the bulls a chance to reset. Moving on to XLV. XLV up 1.27, not too bad, but once again, looking for a lower high. Daily downtrend is in the category, or rather in control of the bears right now. Back into resistance, 148.86 down to 146.53. This whole zone right there, right? We know obviously resistance back here, resistance. This was support, resistance again, and now struggling to maintain this weekly uptrend. Barely holding on to it. No close below. We will see. Can the bulls get it together? A nice bounce and reclaim this area? Or will the bears just take over resistance and into the flush, right? If you're day trading or swing trading this, obviously it's a setup for a short, right? Daily downtrend, looking for the lower high, stop goes below there. Your take profit area is down here. You're a long-term holder, of course. I went over a few healthcare companies last Friday's video that you may want to take a look at the tail end of the video. Moving on to SMH. SMH, decent little bounce. But still, guys, the lower high is right here, 235.49, right? 1, 2, 3 legs down of selling. So if you put the fibs on this, you'll see that this is actually a quite healthy bounce, 0.78. So it does give the bulls a lot of space if they want to reset into a new daily uptrend. We will see, can this bounce continue to be maintained? Well, they're going to need some bigger players like NVIDIA and Broadcom to participate, right? This is a few days now where a lot of the other names participate, but NVIDIA and Broadcom, I mean, to be fair, NVIDIA and Broadcom did bounce, the past few days. NVIDIA took a day off today. It was really carrying the last few days. But overall, right, you need the two biggest components of the SMH. If you really want to get the lift on this bounce, get a nice 100% engulfing and reclaim the support zone, which is the top end at around 233. We'll see what happens. The bulls looking good on this bounce, but a bounce is only a bounce until you reclaim the daily uptrend. Only if you reclaim the daily uptrend can we say, okay, the weekly lows are officially in, and now we look for how much of this can they recapture to reset the weekly. But nice that they're still closing within the confines of support. Once again, 233 down to roughly 219. Moving to IWM Russell right now. So the IWM popping 1.26% to the upside. Not too bad, but who's in control here? Well, of course, it has to be the daily bears, right? Big sweeping downtrend. Now, no new highs truly on the closes. So this is still just one big move, right? You're looking for possibly the lower high. The bounce size right now is just about 40%. It's a good bounce, but keep in mind above us is a huge level of resistance, guys. 217 down to about 208, right? Support for the market's big chop zone, and then resistance, and then you go all the way back here, resistance, and this was huge support. A very big level for the bulls to get through, but at least the bounce size is underway. We will see, can they recapture more, get into support, and then reset? Because if they only stop the bounce here, the retest of the lows is very likely, and that would be support retest of 200 down to about 192. I'm not a big fan of playing the Russell, guys. I think the economic outlook and the economic landscape is too uncertain to give growth just like a green light, blue sky breakout possibility, right? So growth, especially small cap growth, is still not one of my favorite areas of the market right now. We'll revisit this trade when we maybe get a lifting of some of the macro catalysts for volatility right now. And moving into the Dow Jones, lastly, the Dow Jones up about 0.85, but coming into resistance. Who's in control here? Well, obviously, your daily bears, right? Lower high is set, lower low into support, into daily oversold conditions. The support range below us is 41.3 down to roughly 40,500. Now, we are coming into support, but the bounce is fairly decent, right? The bounce size right now, about a 50% bounce. So even if the bulls get rejected immediately without pushing higher would be better, of course, but if they get rejected immediately, they have created some space and are now back above the support range to maybe form a higher low and then try to attack this area in maybe 2 shots if they cannot try and get through it in just one clean motion, right? Now, a bounce is only a bounce until we get a daily uptrend change. So until we get that daily uptrend change, I cannot say that your weekly bounce is underway, because overall, guys, we did lose the weekly uptrend as well, right? So now it's going to be a very long recapture process for the bulls, but we'll take this, as I always do, on the channel one day at a time. Moving on to the VIX, down 6%. When the VIX is high, time to buy. I want all you guys to draw this box on your chart. 30 down to roughly 25. Whenever the VIX pulls into here, it is a great time to start, keyword start, buying stocks. I'm not saying as soon as the VIX touch 30, just full port everything into call options and short-term swing trades to the upside. No. Is it a good time to be adding to some of your favorite companies? Yes. Can the VIX move higher than this traditionally? Yes, absolutely. But this is like the trigger point when everything comes together. The SPY, the QQQ, all the big tech names, everything oversold, market sentiment to the bottom, extreme fear reads on this CNN Fear and Greed Index, right? And the VIX at a 30, I mean, we have to nibble at something, guys. That's the nature of buying the pain. That's when you usually make the best possible trades that you can, because you're lining up all the odds in your favor of going against the market sentiment, right? Like, everybody uses this quote by Warren Buffett, right? They say, buy when the market is fearful and sell when everybody is greedy, right? But nobody actually puts it into practice, because every time that the market is fearful, nobody wants to buy because everybody feels that it's going to go lower and lower and lower. And of course, everything's going to zero, right? Well, guys, we have to apply those things. We can't only say be fearful when others are greedy and greedy when others are fearful, when the markets are at all-time highs. And then when the markets start dropping, everybody just forgets the Buffett quotes, right? And if you're waiting for Buffett to buy, unfortunately, Buffett only files his buys and sells once per quarter. So even if he is buying something right now, you wouldn't really know it until the end of his next earnings cycle, right? So keep that in mind. And also the yields right now, the long-term yields, I mean, we had some mixed action on yields today, but the long-term yields are coming down. This shows us that possibly there is a little bit of a rotation trade into TLT, as we've seen a rotation into gold. People looking for the safety trade. Gold is looking good, and now even starting to bid up those long-term bonds, which largely have kind of been trailing, right? These are very attractive yields for long-term bonds if you're looking to lock in some money into bonds as part of an overall fear trade. Now, of course, the TLT went higher, spiking in the morning, and now retracing a little bit, but you can see what we're trying to get done here on the 10 and 20-year yield charts, right? Trying to roll over here, just looking for a weekly lower high for possibly the fulfillment of the Head and Shoulders prophecy on the 10-year yields. And the 20-year yields are looking largely the same, right? Just looking for a possible lower high on the weekly, and then maybe a rollover that would be translated into a nice rally on the bonds, right? This is the inverse Head and Shoulders on the bond trade, a very slow moving trade, a trade that has a lot of complex parts. But as you know, as I showed you last week, I opened a leap call contract on the TLT. January 2027 is my expiry, because I know how slow they move, but I also know that we are amidst a rate cutting cycle. Can rates be cut faster? Yes. But are rates going to get hiked? Probably not. And are they going to be maintained the same? Probably not. So the TLT will drift higher over the next 6 to 12 months. That's why I like that positioning as well. Now moving into Bitcoin lastly, before we take a look at our big tech names, Bitcoin, not too bad, but you can see how much of a problem this 200 EMA has been for Bitcoin. We've tried to pull into it so many times, prior support as well. This is what backstopped the market, right? And now that whole area is acting as resistance. The big one, of course, is above us, which is roughly 92.5 down to about 88. But there's a mini one right here, which seems to be somewhat problematic for the bulls, culminating in the 200-day EMA. So unfortunately, although they are in a daily uptrend, it's kind of looking like a little bit of a bear flag, right, for possible rollover. We'll see what happens. Bitcoin's been moving directly in line with the indexes and the asset markets overall. We'll see what happens, but the bears are still in control. And I'll remind you, any bounce right now into resistance might just be looking for a lower high, and then we'll see, can they get it done for the trend change? If we get the pure rollover, my next DCA area on Bitcoin is 73 down to 67, but there's not much clarity on this chart right now. Sure, the penchant is for shorting into support. I can't really confidently open any longs here. I'll be patient for the longs here, or if we recapture, then we can maybe look for some swing trade longs, but no longs here. Mostly the setups are indeed for short-term shorts, but not going to comment on whether or not those are actually going to work or not, because there's so much volatility in these markets, right? Now, let's move into our big tech name, shall we? So moving into Apple up about 0.25% today, but last week, of course, the damage was done. If we start on the weekly chart, the weekly bears are definitely in control. And now, unfortunately, we are below this huge area, which used to be resistance, which is now support. That area right there is 225 down to about 215, and the bulls still remain under it. So we are looking for a short-term bounce, but who's still in control? The bears, of course. And the bounce size right now is very, very, very weak, talking about what, like a 10, 15% bounce? So definitely no control there. Any possible swing trades can be for a short, but watch your short-term timeframes, guys. They're trying to recapture the 4-hour timeframes. They're trying to recapture the hourly uptrends as well. You'll need to see a loss of the hourly timeframes. The entry is here. The stop loss then goes above the high, and then you're trying to target for shorts to the downside into the psychological 200. So keep that in mind. That's for possible short entries, because right now we're below resistance, right? Backtest of resistance, that is a short setup. Now, the bulls can obviously break this if Jerome Powell and the markets are just very bullish this week. But before any longs are in play, you need to recapture this level, reset, and then possibly raise. And then the entry is here. The stop loss goes below there, and then you're targeting all the way up there, right? So a long way away from any long swing trades, any long positions here are really just wishful thinking, in my opinion. And even for a long-term portfolio ad, guys, I think there's better companies in the market right now. Apple's just not growing revenue at the same cap that it was a few years ago. And the valuation right now in or around 220 is still very close to a 3 peg. So there's not really much on the table for Apple. If we're holding some long-term shares from back here, from prior years, that's fine. But would I be adding to Apple up here? No, I just don't think it's the best deal in the market. But at the end of the day, Apple is Apple. They have a tremendous ecosystem. I don't think they're going anywhere, but they really need to get their act together in terms of their AI, right? That they promised to us, that they under-delivered on us. And really just the product refresh cycles have not been as fantastic as you were expecting from Apple this year. Moving on to AMD. AMD, well, something must be wrong. Tomorrow I'm going to call the market makers because I don't know how it's up 3.5% today, but it is. So something must be wrong on TradingView or on the NASDAQ overall. Probably an anomaly. I wouldn't look too much into it, right? But for some reason, they're up today. So let's just look at this one, right? So daily uptrend, I'm joking, of course, guys. Daily uptrend is now in motion for AMD. Higher lows are set at about 95. So if you do cap out here, any move to the downside looking for a higher low for possible further trend continuation. Nice shelf of previous resistance, which will now be support at 101. So the bulls have one little fallback area and then a lot of space between the lows, right? Now keep in mind, the daily uptrend is one thing, but you're kind of swimming against the ocean right here. Huge monthly downtrend. Yes, we're reacting from support nicely, the bottom of which was at 97, and even the weekly downtrend as well, right? The lower high is all the way up here, 116. So although the daily uptrend is nice, where are we on the weekly? Well, the weekly is a little 50% bounce. Not a terrible bounce, not a very substantial bounce up until the 80% range, but it's a start. If they can continue this bounce and start claiming some more levels, the 618, which is at 108, and the 782, which is at 111, 112, right? That will give the bulls a good chance of forming a base, giving us a weekly uptrend back and reducing some of this long-term damage that's been done to this stock. I still like playing this one. Short puts, I'll be interested if I can find some entries in the $96 range and even accumulating some shares, guys. If you're looking for the expansion thesis of the company, I'm not trying to instill my conviction on you, but if you like AMD as a company because of what they're trying to do, right? Net margin expansion, revenue and EPS growth going to be crazy. The valuation down here is very, very, very cheap overall. And you believe in AMD's capacity to raise EPS and revenues over the next 3 years, which should be the best years of the company's history. Well, then maybe you could take a little nibble down here and also take your chance at that. Very cheap valuation, allows for a lot of upside. I still think the risk to reward is favorable. But notice, I never said there's no risk. I'm just saying the reward to risk has a favorable profile right now. Moving on to Amazon. Amazon down about 1.12. Amazon's still just doing a whole lot of nothing. Trying to find a base of support down here. 196 down to roughly 186. I'm a really big fan of adding some Amazon shares to the long-term portfolio in daily oversold conditions in the midst of a 20+% pullback, right? Into big support. This level has been tested a lot by the bulls as resistance and now using it as support as well as the 50 EMA. So we're still waiting on a bounce from Amazon. The daily uptrend clear would have to be beyond 201, which is the highs of last Wednesday, but also the 200-day moving average. If you can get that daily uptrend in motion, perfect. That's step number one, right? Step number two is how much of this weekly move can we claw back and possibly get a weekly uptrend back? Because if it's only a very shallow bounce before you lose a possible recapture of a daily, right? It goes like this with only a very shallow bounce on the weekly, like a 25, 30% bounce. Well, the retest of the lows is highly likely and maybe even lower, right? So if we breach this area, we don't set a daily uptrend and just start breaching, just want you guys to know the lower end of support is down here, 175 to 160 roughly. And Amazon right now trading at a very, very, very fair price, in my opinion, in or around 190. Talking about a 1.49 peg on a forward basis, 29.9. And I mean, Amazon's expansion in the next few years cannot be challenged, truly, right? Look at this EPS expansion and also look at the revenue expansion too. They have so many lines of businesses moving at full steam right now. Tremendous buying opportunity for a long-term portfolio, in my opinion. And maybe even for a little bit of a swing trade. If you put your stops below the low and are targeting a more recent high right here around 210, not that bad, guys. It is, technically speaking, a 2-to-1, right? Your target is roughly 210. Your stop loss is down below there, below 190, like 189, let's call it. It's about a 2.5-to-1. Not too bad for a long-term or even a swing trade if you're trying to swing trade this long. Moving on to Google right now. So Google as well, down, has done absolutely nothing over the past 5 days, kind of like Amazon. A lot of big tech just muted down in the gutter. Daily downtrend is now clear as day still. And any bounce guy is going to be looking for a lower high, anything below 176.50. This guy right here looking for a lower high. If they can get a nice bounce, we will see if they can reset the daily uptrend. If this just is a bear flag and we're going for lower low, breakdown will all remind you where are we possibly going all the way back down here, 154 down to about 143. This is going to be prior resistance from back here, support, and also the highs from 2021. So that is going to be a very nice area to pick up some more Google. If ever you picked up some here and you're waiting to DCA a little bit more for better price, that is not a bad area. I'm not saying it's going to go down there. I'm just saying if it does go down there, I will be buying more at a 1.23 peg on a forward basis, at a forward 18.5. I know that Google has its problems, guys, right? Such as competition in their search business, their advertising business, the DOJ lawsuit. But all of that is priced into a very cheap forward valuation for a fantastic company. Moving on to Meta right now. Meta down about 0.44%, another 0.2 in the after hours. And same concept on Meta, right? Take a look at the weekly. It was a very nice weekly uptrend overall. And now we round trip pretty much everything. When you see a massive engulfing move like this, the likely scenario is not just a V shape to the all-time highs. It's just too much of a retracement. At best, you get a tightening range, a two-step process of expansion like this. At worst, you get a lower high and a possible flush to a lower level. Now, the bulls are reacting nicely from the area of support, which is 600 down to roughly 566. Not quite daily oversold, but the bulls are battling right now, right? So we'll see if they can take out the highs of Wednesday rather. If they can, that is a new daily uptrend. Then we measure the size of the push by the bulls on the weekly to see if they have it in them to possibly reset, or if it's too weak, well, you know the rollover is probably coming. They blast through this support zone. They're coming all the way down 530 to 488. This is like my actual sweet spot to add Meta, because even right here, guys, at about 600, the valuation is still a little bit rich, right? More rich than several of its Mag 7 peers. So I want to get a little bit better of a discount on Meta. But if I'm holding shares from back here, I really don't see any reason to sell. The future of the company is too bright for that. Moving on to Microsoft. Microsoft up about 0.04% today, encountering stage one of resistance, right? So 393 up to about 408. That's been the same area that we were playing a lot as a support trade back here for about a year's worth of time. Unfortunately, now it is resistance. Weekly downtrend looking for a lower high. We'll see how much the bulls can actually get up, right? It was a decent move. Got to give it to them, right? Decent move. The lower high is right here, 401.68. As of right now, you put the fibs on this, it's a nice 618 bounce. So the bulls have created a lot of space to maybe reset a daily uptrend and start attacking this resistance zone if they cannot attack it in one clean shot. The bulls not looking too bad. I'll remind you, support still stays set below 378 to 365. Any further ads from me on Microsoft or swing trade attempts will be trying to target this lower end and trying to be brought back into resistance, right? Microsoft, fantastic company, needs no introduction. And right now at a 380, not that rich either on a forward basis, right? Very rare can you find Microsoft in the mid to high 20s. Usually the price to earnings on a forward basis is like always between 30 and 40. So it has come down a lot while, of course, they expand the fundamentals. Microsoft never really lacks on its fundamentals, guys. Even 2022, that infamous bear market, look at their EPS. They expanded. Look at their revenue. They expanded, right? When everybody else was getting crushed. Very nice future guidance from the company. Moving on to Netflix right now, up about 3.49%. No, I mean, next it was a very good day, right? We have an upgrade from an analyst right here, Moffett Nathanson. Don't know who they are, and I don't blame you guys if you don't know who they are either. All respect to them, of course, because they helped the stock a lot today, upgrading the price target to 1,100 from about 850, I think it was their price target before. Very nice move on Netflix right now. You are looking at a new daily uptrend. Netflix is the first of its sector peers to actually set a daily uptrend in motion, looking very good. They also recaptured a resistance range, 935 down to 900 was the area that we were kind of talking about, right? Resistance. They closed under it. We were worried about the rollover. So now the bounce is underway, but I'd be wary, guys, because this was such a big retracement by Netflix bears, right? 80% retracement. Like I was saying on Netflix, on Meta, guys, when you get such a large retracement, normally the expectation is not just blast to the all-time highs. The bulls have lost too much ground. At best, you can see a two-step recovery process. At worst, of course, if the bounce ends here, just looking for a weekly lower high, into lower low, weekly downtrend rollover, and that would not look very good, right, for a head and shoulders pattern. Still a lot of trading left. I'm not calling it either way, but Netflix not too bad right now for, no swing trades. There's no clear levels for swing trades for me. In terms of a long-term position add, well, I liked it a lot when we covered it at 850, right? At 860, it was about a 1.51. Now, when you're looking 10% higher, the peg's like a 1.65, 1.7. It's not a terrible ad for the future, but it's also not a very good ad for the future. If we're holding shares from all the way back here or prior, I see no reason to sell, of course. But starting something up here, you really got to go light and you got to kind of DCA on the way down if the markets do provide that entry, right? Moving on to NVIDIA right now, down about 1.76%. So NVIDIA, I mean, NVIDIA was carrying the last 4 or 5 days of trading and now unwinding a little bit of that, right? Being challenged by this green line, which is the 200-day EMA. And just above us is the infamous resistance range, 125 to about 133. You know, it was support for the bulls for a long time. Before that, it was resistance from the bears for a long time. And now it will be resistance, especially in the context of this weekly downtrend looking for a lower high. That being said, the bulls have created a lot of space below us. Anything above 105 roughly will be looking for a higher low for possible further trend continuation into the highs. NVIDIA with a presentation tomorrow on quantum computing. They have another, investor or rather technology presentation tomorrow. NVIDIA does these roughly once every quarter. The last one was in January. We'll see what they have to say. A lot of quantum stocks popped off of that. You know, kind of a buy the rumor, sell the news thing. I'd be a bit cautious about the quantum computing stocks. They rally into events like this. Maybe they rally on the day of the event, but after it's finished, you might find a little bit of a sell down after that. So the way I'm playing NVIDIA is if we get a retracement here, since we have a nice bounce, right? Very nice bounce in terms of the daily context, right? You're talking about a 618 bounce, fairly decent, gives the bulls a chance at resetting the daily uptrend. If we get a move down into the expected move, which I gave yesterday, 115, give me a little bit of a move down. I'll be looking for some short put entries down here, about 106, 105 to short, get some puts, right? To buy some shares if we close down there. So that short put is on deck for me tomorrow. That's just how I'm playing NVIDIA overall, but not looking too bad. And Tesla down another 4.79. Not looking the best on Tesla, right? Failed daily uptrend recapture, and now just the rollover. So this is just daily downtrend continuation, right? We know that Tesla has been in the media recently for several reasons, none of which good. Dwindling sales pretty much worldwide at this point. Yeah, you can say it's a brand factor, but also, I mean, the entire auto industry has been seeing weaker sales for the last 2 years. So there's the overarching trend of auto sales coming down. There's the increase in competition and arguably on-par technology of several other competitors like BYD, which is a new portfolio ad for me, BYD out of China, of course. And then you have the whole Elon factor with Doge and, his affiliations with President Trump. And that's just been kind of bringing sentiment down, right? These are the objective things that are affecting Tesla right now. They're not my opinion. It's just what's been happening. Yeah. Lower highs are set right now at about 250. If we roll over, this was not a very good bounce to begin with, right? This is why the size of the bounce matters. 38.2. Now, if we cut these lows, the lows from Wednesday, the retest of the lows, these lows or lower will be highly likely. If that is the case, you are looking possibly at a further downswing into 220 down to about 190, at which point we will review whether or not we are getting back into daily oversold, whether or not we can get a bounce and a daily uptrend going. But there's no longs here, guys. A long comes when you get a daily uptrend shift, and the long goes here on the break of the daily uptrend. The stop loss usually goes below there, and then you target a most recent high such as that, right? This is just me being Picasso, but it's going to look something like that. There are no entries for longs. If anything, this was a back test of resistance, entry for a short into the support range for a temporary swing trade. Moving on to Palantir. Palantir up 1.29% today. Not bad, right? Palantir really not bad, right? The downtrend is clear as day right now, but nice engulfing move. This is a very nice engulfing move by Palantir, recapturing almost 100%, right? Over 80% of the move and recapturing support below us, 83.69 to about $76. Now, Palantir has a lot of space. They can reset a higher low. If they cannot fully engulf this move, they have a chance to reset a higher low and go for a daily trend change. But eventually they will have to reset the daily uptrend if you want to establish bull short-term control. On the weekly, they never lost it, guys. Not too bad. Getting the weekly higher lows in are definitely set right now at about 74 and possibly looking for some expansion. But similar to Meta, similar to Netflix, guys, when you have a retracement size, right, up and then down 80% of the move, normally, guys, the most likely scenario is not just expansion. Even for Palantir, more likely than not, you might just get a two-stage recovery process. If any, worst case scenario, of course, is the lower high into weekly downtrend rollover. At that point, you'd be looking for lower lows around the 72 to 64 area. This is the area that I'll be patient in waiting for, right? If it doesn't come, no problem. I still have some Palantir shares. If it does come, beautiful. I'll be looking for a little bit of a swing trade. And if you absolutely want to swing trade this one, guys, trade it with a stop loss. Stop goes below 74.75. You would be targeting the all-time high expansion. It is a 2-to-1 trade from here, but still not my favorite setup in light of all the market turmoil that's going on right now and the fact that the turmoil might just not be finished. Moving on to SOFI lastly, SOFI also coming into its own respective little bounce um, patterns, right? So lower highs are set right here at about 1480. The bounce right now, not too bad on SoFi. If you put the fibs on this one loosely, right, you're roughly at about a 38.2 bounce. If you lose this bounce and cut the lows of today pretty much and just start reverting into another leg of downside, only a 38.2 bounce does give the bears more than enough opportunity to retest the lows or lower. Good thing for us, we're actually into our support range that I was liking on SoFi, which is roughly 1169 down to about 942. Not that bad of a look for SoFi. I know it's a weekly downtrend, but keep in mind, just like everything, we're culminating into, well, big support for the bulls, daily oversold conditions, so you do get a little bit of a bounce. You would like to see the bulls able to reset, bounce a little bit higher, right, and give us a daily uptrend reset. Only then can we start measuring in the weekly, okay, how much of this weekly move can we get back? Because more than likely than not, guys, you're going to run into 14. If you run into 14, it's going to be first test resistance, right? So then you'll need to do a very long weekly uptrend recapture. And that's just the way I see it on SoFi. Rather than predicting how fast we can reclaim this zone, I'd rather just be a buyer of buyer of shares down here. And for that, I'm using short puts, selling puts under the market to possibly collect shares. And if I don't get assigned, at least I get to collect some of that very juicy premium. But SoFi, not looking bad, all things considered. I'll remind you what the long-term bulls are going for here, right? Looking for a retest, monthly, higher low for possible expansion. The monthly chart is a very long duration chart, so I wouldn't be loading up massive call options for the $20 test just yet. It may take a few months, maybe more than a few months to recapture, but overall, the pattern on the long term is not lost. That is everything for your big tech names. As I said, if you want to look at the value names, right, that I was highlighting, go back to last Friday's video. I spent about 15-20 minutes on a whole bunch of value names that I was looking to play. And even the top 5 options video of yesterday, take a look at the top 5 options plays. It'll let you know what I'm looking for this week. But also the bonus plays at the end of the video. There's another 10-12 plays there as well. To be time efficient on this video, though, we'll jump into my portfolio right now. So taking a look at some of the trades that we made today here, guys. Well, I did a massive recap on the Friday session of all the positions in the portfolio. So today I'll just be giving you an update on which ones I was able to close for a profit and the positions that I opened today and which ones I am maintaining. So we had a few closes today. Toast, you might remember this one. We wrote a short put for 18 cents. Last Thursday, we were able to close it for 4 cents, 78% profit in 2 trading days. Not too bad for a very easy wheel in and out trade. Very small value as well, small price stock, right? So it's available for a lot of people who have small portfolios. Brookfield was another one I've been highlighting for the past few weeks. We were able to get out of this one as well. Just take a little bit of risk off the table. Not that the stock is risky, but profit is profit, right? This one was expiring Friday. We got $1.20 for it when we wrote the contract. Close it for 30 cents, 75% profit into Powell, into this week's uncertainty. I'll take that off the table if they present me a new opportunity by the end of the week. Well, I'll revisit this trade quite simply, but profit is profit. SoFi as well. Wrote this one last week too. We actually got 45 cents total credit for this one, rolling it for 2 weeks, and now we were able to close it for 5 cents. 90% profit. Why would I hold it until Friday, right? I'm at 90% profit. Might as well just close it. It was an $11 short put. If I get a retest of the lower $11 range this week at some point, I'll do these contracts again, right? So those are the trades that I was able to close. Now, the trades that I opened today, well, in line with what I've been telling you guys, I'm a big fan right now of buying some shares. And I also wanted to show the Discord members too that that's what we're in the business of doing. Yes, I'm still looking for wheel trades all the time. I'm still looking for some swing trades. But recently, with all the profits I made last year, now I'm building a little bit of a share portion of this trading account just so we can hold some of these levels in the events the markets recover. If the markets erode further, I'll be adding to these, right? They're longer duration swing trades. So today, although there are no new wheel trades, I preserved a lot of buying power going into Jerome Powell, a ton actually. You'll see that there's a few new share positions in the account. Now, it's not a long-term portfolio, but I'm building some swing trade shares through the drawdown that I'll be looking to close at some point in the next few months if we get that market expansion and add to them in the event the markets roll over. That's why a lot of them are very small. Amazon, new position today. We added them at 194.79. 7 shares. Tiny little entry position, guys. I was telling you guys the name of the game nowadays is ownership. You want to own these companies, not only short-term swing trades on calls, on puts. When they come down into good levels, I am actually taking ownership of some shares. So as I tell you guys, I'm a big fan of buying these dips, but very slow. As you can see, it's like a 43K portfolio right now. We're going very small and very slow, not trying to predict the absolute bottom, but just DCAing into some of my favorite companies, right? All the other positions are maintained. I won't be going over the other ones that don't have a blue dot. Blue dot means that it's a change in position in the last 24 hours. I did a huge recap on the Friday video. If you want to see all these positions and their descriptions, just go back to the Friday one. One other one that I took today is American Express. Been talking about this one a lot on the channel recently. And although I'm not buying it at the absolute bottom lows, I picked them some today, right? American Express, the fundamentals are gorgeous on this company. Warren Buffett owns it himself. So if you have a problem with it, well, maybe you have a problem with Warren Buffett's portfolio. It's his trade, not mine, right? I'm just getting in at a fantastic discount here, 20% from the highs. Crazy free cash flow yield of 6.08% and a 1.28 peg. What more do you want? Fast-growing company, very loyal customer base as well. I chose to add a little bit of a swing trade position for some shares. Then we have an Elf Beauty. Elf Beauty as well, this was a roll. We had covered calls into the end of last week. This is a roll forward of the 65s. I was assigned Elf at the $71 mark. After a few key position rolls here and there, I'll show you the updated cost basis on this Elf Beauty wheel trade that we've been in for a while right now, right? The updated the cost basis now with today's credit is a 60.69. So if I get called away next week on Friday at 65, I'm still pocketing 65 minus 60.69. So we're up like $4.30 per share on Elf right now. And this is just in the trading account. I do have some in my long-term portfolio, just to get giving you guys an update as how I'm continuously reducing my cost basis on this assignment. So right now we're actually up some money. Moving on further, another trade that I closed today, but it wasn't, this one I started before the Discord. You might remember I started this like 3 quarters ago in like August, or even maybe July, August, this position. Intel, leap call contracts. I closed one last week at like 465. I closed another one today at roughly 580-ish. I'll show you. I put it in the chat right here. About 580, I closed it. If I can see right here. Yeah, so Intel, I closed it about 565, 567 on the day. Cost basis was 347. I had 3 of these contracts. I was telling you guys I round tripped these a few times over the course of the last few months and whatnot. You know, I bought them all the way back here, guys, after this earnings, the disaster that was in August. Now, they came up in this area a few times, once, twice, 3 times, and now 4 times. I'm not going to round trip this one again, so I took 2 profits, one last week after the CEO news, and now one today as we move into resistance. It's huge resistance, guys, right? Big resistance from here. Fair value gap, yes, but, you know, it's a very big level for Intel. I'll keep one because I have a lot of time on this one, and if ever Intel revisits the lower 20s, which is always a possibility because they didn't fix anything. They just got a new CEO, right? If they come back down here, I will rebuy some of this position, but now I only have one little call. The whole position now is free. I've taken my profits. This last contract is free. I'll hold it for the while, and if they get a re-entry, I might just get back into it. And other than that, guys, there's only one other position that I added to that I didn't show you guys yet, and that is the TSM. So TSM, same concept. I bought 8 shares. Very small starter little position. I was telling you guys, it's in my long-term portfolio. I figured I should put it in a swing trade account in this trading account too. I bought it pretty much just today towards the lower end of where we've been trading at. If it falls a little bit more, my next DCA is like the 140s, but I figured I should commit to a position right here on TSM because this company as well is trading at a 1.14 peg, very cheap, fantastic revenue and EPS growth, fantastic net margins, and crazy demand through at least the next 2 years, 25 and 26. I should update this right here. And you know, how can you go wrong, right? It's nibbling on something, 22% from the highs, such a high quality company like TSMC. I figured I should oblige. And lastly, we have one little lottery throwaway, guys. Please do not do this. I did this. It's in my lottery section. If you want the proof, it's a lottery trade. Look, TSLA, risky. Don't do this unless you want to play something lotto. One tiny contract. I could have gone way more. At the end of the day, Tesla is so out of favor right now. And I'm playing a 2 times leverage bet on this. $6 puts, which is literally like, I mean, for next week, right? TSLL, $6 short puts. It's come down so much. I'm at $6, which is literally like 28% below. Tesla would need to fall another 14% by the end of next Friday. Anything's possible. It could happen. But the reason I like this one is because the covered calls, if I get assigned on this one, the covered calls are so juicy that I'll probably be able to get out of it to a certain point. But I figured, you know what, for like 2.5% for 2 weeks, I may as well take the trade. It is a good margin of safety. Don't follow me, right? And none of this is financial advice anyways, but it's risky. I don't want to see you guys loading up 10 contracts, 20 contracts. I mean, you see the size of my account, right? Some people have, well, I have a much larger other trading account than this, and I would still only ever do one contract. It's very risky. It's 2 times leverage. It's on Tesla. $6, mind you, would be like Tesla 195-ish. Anything can happen. We'll see. If I get stuck with it, I'll show you guys how we can manage it. And that is all the updated trades and all the rest, guys. Nothing else was closed. I show you the closed trades. This is how we're standing into the rest of the week. A ton now, an absolute ton of buying power to go shopping. But what I will not do is chase the markets to the upside and over leverage on this bounce here and then get trapped on the downside, right? So I got some tiny little shares, but no large wheel trades just yet. I'm waiting for Jerome Powell, waiting for the Fed meeting, and waiting for possibly another retest of the lows, more fear, more volatility. The next 30 days, I'm literally just chilling for a bit, right? Take the foot off the gas, get out of margin, a little bit of swing trades here and there. But for any sizable large positions, I want to wait for the April 2nd tariffs, more macro clarity, more possible fiscal policy clarity, what's going to be the tax cuts, the deregulation for corporate America. You know, all those things combined, I need a clearer picture. So for the next 2 to 4 weeks for the swing trades, they won't be very large because I'm not a fan of trying to predict the market when there's so much lack of clarity right now coming from all sides, right? Not only from within the US, but also globally. It's a very complex picture, and I would not begin to, lie to you guys in saying that I know exactly what's going to happen for the next 30, 60 days. Longer term, I'm quite bullish, but as of right now, in terms of positioning, take the foot off the gas. I give this metaphor all the time, right? The markets is always like you're driving down the Autobahn in a Porsche, especially when you're trading, yeah? Driving down the Autobahn, unlimited kilometers per hour or miles per hour in a Porsche on a bright sunny day. When the rainstorm comes in and you have summer tires, you still going to be fully on the gas, 320 kilometers, 200 miles an hour down the straights? Nah, right? You're probably going to be in the right-hand lane with your summer tires, half speed or a lot less speed with the wipers on and your 4 flashers on as well. That's how I'm doing it right now. You can see from the portfolio, I'm still net long, but I'm not overcommitting with size, nor with too many positions either, like sizable positions and aggressive positions. No. I'll be patient, save my buying power, and we're going to close out this year just as strong as we did the last 2 years. So I'll keep you guys posted on that. That's everything I had for you today. Hopefully you guys enjoyed that. If you did, consider dropping a like. We really appreciate it for the growth of the channel. Consider subscribing to the channel. If you're new, we would love to have you back. We do these videos every Monday through Friday after the close. And lastly, if you have any questions, please leave them down below. I'll get back to you as soon as the next 24 hours. And in the event you guys want all of my live trades in real time, here are all the live trades from the inception of the Discord, guys. The green check marks are the wins. The small little red marks are the losses, right? Relatively consistent in terms of our trading strategies. I do trading strategies for all styles, guys. Small accounts, medium accounts, large accounts. But the benefit of the Discord is being in a Discord with over 150 other members who have the exact same consistency mindset here. We're not looking for massive home runs, base hits in the trading account, and also building long-term wealth creation habits in our long-term portfolios. So I also do private morning live streams in the morning, every morning from about 9 through 11, 2 hours, where we go through my trades live. And also I answer all your questions on your stocks, your options, your long-term portfolios. And if you missed them, they are all recorded. And you can also ask me all your questions in our chat rooms. And I'm very, very fast to answer. Private videos as well, where I show advanced level strategies that I don't show on the YouTube channel for options for, growing small accounts into large accounts as well. What should the allocations be depending on the size of your accounts? All types of videos that members have found tremendous value in as well. And you also get access to all my watch lists, all these YouTube watch lists, the options one, the wheel account ones, the value lists as well, and all the technical analysis, the support range, the support resistance boxes that I draw on the chart, and all the annotations. Like whenever I do annotations on companies that you guys see like this, right? On over 100 plus different stocks, you get all that included in the Discord as well. All you have to do is literally just copy paste. You click 2 buttons, you get all the watch lists, all the annotations on all the stocks, and that's pretty much it. If any of that interests you, the link to the Discord is down below. And if not, I'll see you back on the channel, guys. Always a pleasure. Love you guys. Take care. Have a good rest of the week in trading. I'll see you tomorrow after the close. That's it for me.